Dashna, Marketing and Growth at Bridgewea. Our webinar today, The Tech-Driven Investor, U plus Power of Tech is equal to Superpower, is designed to unveil how technology isn't just a tool, but a game changer in the hands of savvy investors like yourselves. As we all know that in a world where technology is rapidly reshaping landscapes, nowhere in this evolution more exciting than in the realm of investing. To delve deeper into how technology can be your lever in the world of investing, we are privileged to have with us today Mr. Kiran Hirlekar. I welcome you here, sir. And Mr. Akshaya Bhargava. Welcome you, sir. Our distinguished speakers, their expertise and experience are pillars that will help us understand and navigate this dynamic intersection of technology and investment. Mr. Kiran Hirlekar, our Chief Business Officer at HDFC Securities, boasts a distinguished career spanning over 3 decades. With a rich background in retail broking and wealth management, he has been a valuable member of HDFC Securities since 2005. Kiran currently spearheads HDFC Securities' wealth business vertical, catering to private banking and NRI clients nationwide. His role involved leading HDFC Securities' retail branch business and playing a pivotal role in establishing HSL branches. Kiran holds a degree in chemistry from the University of Mumbai, graduating in 1994. We welcome you today, sir. Mr. Akshay Bhargava is an Indian-born British entrepreneur. Since 2018, he has been the founder and executive chairman of Bridgewea Limited, a fintech firm that uses AI models to provide institutional quality research signals and investment ideas to individual investors, advisors, and asset managers. He has been CEO of Barclays Wealth and Investments between October 2014 and December 2017. CEO and founder of InfraHedge, CEO of Butterfield Fulcrum, and CEO of Progon Limited, acquired by Infosys and renamed as Infosys BPO. He started his career at Citibank, spending 22 years in a variety of senior positions, including country manager, Citibank Czech Republic. Akshaya serves as an independent director on the boards of Wealthify Limited, Mindtree Limited, and Avendus Wealth Management Private Limited. So without further ado, let's dive right into the heart of today's topic. I'm excited to hand over the session to our esteemed speakers who will guide us through this enlightening journey.
Thank you, Ashna and Ayush. Very good evening to everyone. So friends, we all have witnessed current digital era. Technology has become an integral part of our daily routines and emerging as a critical component within the investment sector as well, right? So we find ourselves at a juncture where the utilization of technology have transitioned from mere advantage to a fundamental necessity for investors aiming for distinction and success. To explore this subject further, it's my pleasure to welcome Akshay, who will enlighten us with in-depth insights. So Akshay, before that, I have a question for you. Of course, you must have covered that, PPT as well. Okay. So what impact do emerging technologies have on evolving world of investment, and how individuals harness this advancement to maintain a competitive edge in the latest investment cycles? So over to you, Akshay. It's all yours now.
Thank you, Kiran. It's a great pleasure and a privilege to be speaking to all of you on this call today. And Kiran has asked a very interesting question. What are the recent advances in technology? My whole presentation is actually based on that, and I will cover it in different parts during my presentation. But for now, suffice it to say that I believe that what has happened in technology in the last 3 or 4 years has made it possible for the retail investor, which is all of us, to really act like mini hedge funds. So we have the sophistication, we have the intellect, we have the research ability, we have the ability to analyze data. And this data used to exist in very famous hedge funds like Citadel, like Renaissance Technologies, like D.E. Shaw. Today it is possible for the common man to access it. This is really the dream behind the company that I created in 2018. So let me talk a little bit about Bridgewea, which is the company I founded. We are headquartered in UK, but we are very active in India. India is our biggest market and the most strategic market. There were three of us who founded this company in 2018. We all come from experience with very large organizations like Citigroup, Barclays, State Street, Infosys, UBS, and so on. Our vision is very simple. We want to use advanced technology and professional quality tools to empower individual investors in a way that has never been seen before. Okay. We of course use AI. We don't use generative AI. So, some of the common problems that one keeps hearing about, hallucinations and all, are not relevant for us. Maybe one day they will be, but for now we use very sophisticated AI technology to create investment ideas for digital investors. And the beauty is that the product I'm going to talk about today, called Equity Select, it is only available for HDFC Securities to give HDFC customers an advanced and simple and sophisticated solution. We as a company never go direct to consumer. We only work through partners such as HDFC. Let's
So
talk
before that, sorry, Akshaya, I'm cutting in between, but before that, do you target any specific customer base, or it's open for everyone? How's it?
So, very good question, Kiran. And please, stop me at any time if you want to.
Sure.
So, look, I used to run world's 8th or 9th largest wealth management business, which was Barclays. We were 200 billion pounds in AUM. We were 150,000 customers, 14 countries, 3,000 people. And I have seen there are two kinds of customers, two kinds of investors. One want to just hand over everything to an advisor, saying "Mere liye kar lo." The other is want to take charge and do it for themselves. They want a little help, but they want to do it themselves. My view is that the do-it-yourself segment, the second part, it exploded during lockdown, and it is going at a speed that I don't think it is going to stop. We have seen this in India, I've seen this in US, I've seen this in Europe, I've seen this in Asia. This is a global trend. So while we do not specifically target any kind of customers, the best ideal use of our products is somebody who has a view on the market, who is reasonably familiar, not expert, but with some technology tools, their expertise can go on steroids and become very powerful.
Okay.
So my philosophy is that you are the investor, it's your money, you must have the ability to decide. That's number one. So you must be in control. Number two, you must never pay big fees. The fees must not be linked to AUM. So we don't do advice, we don't do management of money, we don't manage your money. And thirdly, we want to give you technology tools that will allow you to make decisions and make life very simple. Now, you do this by choosing what to wear. You look at the weather report on your phone, and then you wear what you like. When you make travel plans, you'll do price comparisons and look at hotel sites, etc. When you buy gadgets, we always look at reviews and so on. Why don't we do this with investments? And maybe we do, but it is an imperfect world.
Yeah, great. This is something new. This was missing. So far. Good that we have it now.
Yes.
No problem. I got an answer. Actually, I got an answer.
And I think today's technology makes it easier.
Yeah.
Because data has been available for 40, 50 years. So, koi nayi baat kya hai? Anybody can ask. Sure. The nayi baat, the latest thing is recent advances in AI technology that makes it possible. And today's technology is advanced enough to provide very powerful research on demand at a very, very low cost. What it means is, traditionally we have all followed Mr. Warren Buffett on value investing, that, identify good stocks, wait for their price to drop, kharid lo, and then forget about it for a long time. Okay, there's nothing wrong with that. But that is not the only investment strategy. Okay, there have always been patterns in the short run. They have just been very difficult to identify. But today's technology makes it possible to identify short-term opportunities and take advantage of this while retaining a long-term perspective. Okay, this is the interesting thing that is happening in today's world. Historically, I mentioned some hedge funds. Only hedge funds had this ability. But today,
Correct.
we want to make it accessible to everybody. Okay, so it's really using technology to empower investors. That is really, in one
Right.
sentence, our mission. So I want to introduce something called Equity Select. It's an investment basket. You can call it a model portfolio, you can call it a model basket, you can call it an investment basket. जो भी term use करो, it is basically a long-term investment that makes money by predicting short-term movements. Now, this may sound like an oxymoron. You know, एक तरफ long-term बोल रहा है, एक तरफ short-term बोल रहा है, तो क्या है? ये दोनों है. You know, that is the interesting. So what Equity Select does, it gives you a recommendation and lets you make any changes you want. So you are always in control. Secondly, it is a long-term investment that rebalances every 2 weeks.
So you're saying long term and 2 weeks, both the things are contra.
I know that's the interesting bit, Kiran. So you have to think of it as long-term equity exposure. And within that, you don't want to just buy and forget, because there were many great companies 30 years ago. If you're still holding them, some may have done well, some may have collapsed. So you need to actively manage it. And through technology, we are giving you the ability to actively manage it every 2 weeks. So think of it as your personal mutual fund, where you are actively managing your portfolio or your basket using technology without paying high fees. Okay, and I will talk more about how all this is done. While talking about fees, on the right-hand side, you'll see the fee structure. It is very straightforward. Minimum investment is 1 lakh. Although I will tell you, I recommend 2 lakhs or more, because at a higher amount, the fee impact is better. Okay, but up to you. Invest 1 lakh, that's fine. There is also a very, very attractive Diwali offer. I won't say more about this. Please contact your relationship manager and they will gladly tell you. Okay, so let me tell you how this process works. What is the technology doing behind the scenes? Okay, there are 3 parts to it. One is stock selection, second is portfolio or basket construction, and third is monitoring and rebalancing. So how do we select stocks? So we get a daily data feed from Bloomberg on 4,600 global stocks, including Indian stocks. We create 1,024 features for every stock. Why 1,024? I can go into detail separately, but that is an important thing. We then use AI models that we have trained extensively, and then we use advanced technology like techniques like computer vision and neural networks to come up with predictions on stocks that are likely to produce a positive return in the next 15 days. Then we create a short list of the recommendations. We take the best recommendations based on liquidity, market cap, and analyst coverage. And then the final step is we create a basket that has 6 momentum stocks and 4 value stocks. So it's a balanced kind of a basket. And that's it, really. You know, all this happens behind the scenes. You don't need to worry about it, but I'm just explaining the logic. And once you buy, you can monitor it on your HDFC app. You can monitor it pretty much in real time. And once a fortnight, we will notify you about the rebalance. And please go and rebalance. It is very easy. It is one click, and that's it. So it's a very simple.
Sorry, again, I'm interrupting you. But, what is the rationale behind, selecting the stock? Like, it is AI based, or, there is something into it, like, and how do you ascertain that, the stocks are going to do well in the next 14, 15 days or whatever, like, a month's time or so?
So let me explain. Let me go back to the first block, which is selection. So what we do, Kiran, is we get market data, and Bloomberg, as you know, gives you 36,000 data fields on every single stock. We use the data to compute 1024 features. Okay, why 1024? Because it makes a perfect 32 by 32 matrix grid. Okay, each cell in the grid represents one feature. And the way we have trained our models, we've gone back 14 years. And we have identified stocks that have delivered good returns for in 14 days, 15 days. And we have then looked at these features and calculated the correlation of each feature with the objective of the model, which is 15-day return. And then we codify it in the 32 by 32 grid, where each cell, the color, it's a grayscale, so it's white and black and gray. So the darker it is, the higher the correlation with the objective. So black is one correlation, the perfect, white is 0, and many million shades of gray in between. So what you end up getting for every stock is a 32 by 32 square, which has different colored squares inside it. And so it becomes a visual image. And the machine is now trained to identify which visual image represents a breakout pattern. Okay, so that is how we teach the models. Then every day when we get data, we convert every stock into an image, 32, and then we do image matching. And this is like facial recognition. You know, if you go to airport, they'll have facial recognition. And you know, the more white faces the machine sees, the better it gets at recognizing white faces. The more brown faces the machine sees, the better it gets at recognizing brown faces. Similarly, the more breakout patterns the machine sees, the better it gets at identifying breakout patterns. And so that is how we create the long list of our predictions. The long list is then converted to a short list using filtering techniques like computer vision, neural networks, spatial ordering. All these are advanced AI techniques, and that is how we do it. So our models are based on stocks that have done it in the past and looking at the patterns they represent and looking to identify similar patterns in the future. Okay, does that explain it?
Got it. Yeah, yeah.
Okay, so that is how we construct it. Now, what is different about it? You know, you can say सब लोग बोलते हैं AI कर रहे हैं, सब लोग बोलते हैं advanced technology है, ये कौन सी नई बात है? So, firstly, you know, we have used 14 years of stock market data. You know, it is possible for people to do it, but you have to have expertise, you have to have a lot of time, you have to have a lot of computing power, and there's a lot of, you know, work involved here. Secondly, the mathematics behind it.
Sorry, again, I'm interfering. You know, why 14 years? You know, specific 14 years. Any reason behind it?
We did not want to go to the 2008 crisis. Okay, so we stopped at 2008, and then we looked at 14 years after that. And because then there are business cycles from between 2008 and now, there have been many business cycles. So we felt that the 14 years was optimal. Because if you go too far back, then the relevance of the data to current scenario is not that high. You know, because world conditions have changed, economic conditions have changed, and so on. So we felt that was reasonable. When we get daily data, we perform over 35 million computations every morning. So 3 बजे data आता है. Between 3 o'clock and 7 o'clock, the machine is super busy doing millions of calculations. And then the output is what are investment ideas. And finally, we have the track record to show. And I'm going to show you that in a minute, because it is not just theoretically paper pe chalta hai, in real life mein bhi chalta hai. Okay? So let me go into performance and analysis, and I'll show you a very simple chart for equity select. This is a chart that says if you had invested 100 rupees in equity select in end of January 2022, which is roughly 21 months ago, today that 100 rupees would be worth 188 rupees. Had you just bought an index, it would be worth 114 rupees. So as you can see, so the lighter colored shape shows the Nifty 500, and the darker shape shows the equity select performance. And as you can see, there is significant alpha here.
Sure.
What is very interesting to note, let me spend a couple of minutes on this chart. So the interesting thing you will see is that neither Nifty 500 nor equity select is a straight line. Okay, it does better, but it does better over time. Okay, if you just take January to March 2022, the left-hand side of this chart, it has done well, but not by much. So this is why I say that you must take a long-term view. And it is only in the long term that you get the benefits from compounding and returns and superior performance. Because in any individual period, it is very spiky. As you can see, it goes up and goes down. From fortnight to fortnight, it can go up and it will go down also. So be prepared for that. I will talk a little bit more about it in a moment. But now let's look at some actual numbers. So the top part of the table is returns. It shows you returns on equity select. It shows you returns benchmark, which is Nifty 500, and relative returns is one minus the other. So equity select return minus benchmark. So as long as the relative return is positive, you're doing better than the index. And as you can see, whether you take 3 months, 6 months, year to date, full year 2022, or inception to date, which is the last column, it has consistently beaten the index. And the longer you stay, the more it outperforms the index. That's why, the long-term focus of this whole thing. So the first part of this chart is the first table is returns. The second table is risk. And you must understand risk. You cannot go into this without understanding risk. So if you take volatility, which is the, how much it goes up and down, equity select is 20%, whereas the benchmark is 14%. So it is more volatile than the benchmark. Okay, so you should conclude correctly that it is slightly higher risk than the benchmark. Second KPI is maximum drawdown. Maximum drawdown is distance between peak and trough. So how much can it drop, or how much has it dropped? Equity select is almost 19%, whereas the benchmark is 15.5%. So even the maximum drawdown is higher in equity select than in benchmark. Again, underscoring the point that it is a slightly higher risk thing. But my argument to that would be that it is higher risk, but it is also higher return. And Sharpe ratio is the number that captures the risk-return relationship, risk-reward relationship. And conceptually speaking, Sharpe ratio is amount of return you get for 1 unit of risk. So if you take 1 unit of risk in equity select, you get 2.85 of return. That is excellent. Whereas in the benchmark, if you take 1 unit of risk, you get 0.1 unit of return. So that is not so good. So Sharpe ratio to me is an important number to always remember. So, I want to be very clear. This is a slightly higher risk basket, but it tends to produce higher returns. And that is captured in the Sharpe ratio number, which is the risk reward equation. I want to just talk about a couple of things before I stop. How to find equity select. You should, of course, call your RM. That is the best way to get to us. But if you want to do it online, you can go to HDFC Securities website. You will see an icon for basket investing. Please click on that. That will take you to a list of baskets available with HDFC. You will see equity select right up there. Click on equity select. Then you will be able to do a lot of analysis and look at returns, look at all the other KPIs that I talked about. So it's quite easy. And then on the same page, you can do it quite easily. Okay. How to get the best out of equity select? And now I speak from experience. First of all, think carefully about how much you want to invest. Like I said, minimum is 1 lakh. So aapko jo karna ho karo. But remember that fee impact can look big if you invest small amounts. If you invest larger amount, then the fee impact sort of diminishes a little bit. Okay. Secondly, always take a long term. This is not about short-term gains. Yeah. This is not about buying New Year gift for girlfriend or something like that. This is about taking a long-term view on exposure to Indian equities. Okay, and if you know, and people, there is enough data about this that if you had invested in a stock market just as an index in 1991 when India liberalized, you have done phenomenally well. But but that's 40 years ago. Long time. So equity investing is a long-term view. So this is really not investing, school money for your kids. This is really about building capital over a longer term. And remember that Equity Select is a long-term investment in equities. That is how you must think about it. Thirdly, we spoke about risk reward. Please evaluate risk and reward carefully. Equity Select has higher volatility, but with higher returns. Okay, make sure you're comfortable with that. If your personal circumstances or your mindset or your preference is not towards higher risk, then I'm sure your HDFC RM can suggest many other alternatives for you. Okay, so please remember that. Yeah. Finally, not finally, but fourthly, there's one thing that people forget. We send fortnightly rebalance notifications. It is very easy to rebalance. Go there, one click, you can rebalance. But a lot of people forget to do it. So, and then their performance will change. So I would recommend that you rebalance regularly because it is a way for you to continue to actively manage your basket. Okay, 2 हफ्ते में एक बार करना है. It is not that time consuming or difficult. And finally, remember that value in any rebalance period can go up or can go down. Do not get overexcited about going up. Do not get over-depressed about going down. Just take it in your stride. Stay focused on the long term because this is a long-term basket. Okay, I think that is all I wish to say. Thank you very much for listening. I would love to handle questions or answer any queries anybody may have. Thank you so much.
Thank you, Akshay. And yes, we do have a series of questions for both Akshay and Kiran here. And I think the question that I'm going to ask both of you would encapsulate the essence of what we're trying to achieve with the webinar. So Akshay and Kiran, this question is to both of you. What are your views on basket investing as a future of investing, and why do you think so?
So, Ashna, right? Yeah, I'll answer this question. I get a lot of queries like this, before as well. Okay, so my answer to this is, Ashna, basket is poised to, shape the future of investing by offering diversification, accessibility, ease of transaction, customization, etc., etc. Okay, everybody is aware of it now. Okay. It democratizes investment opportunities, empower investors, and foster new innovations in investment themes and strategies. So I think it's the easiest one, to understand also. And as I said, operationally also for execution point, there is ease to it. Okay, that's what the future of investing, through baskets, I think about.
Yeah, no, I think those points are very, very important, and Kiran said it beautifully. But I would also take one step back. As an investor, how should I think of allocating my assets? Okay, now some assets I want to allocate to a passive strategy. And passive strategy for me is not mutual funds. I would either buy ETFs or I would buy the index or whatever, and some of it you must allocate to a passive low-cost strategy. And again, HDFC RM is the best port of call, best place to ask. Second part is, there are 3 parts to this. So that's the first part. The second part, how much you allocate is up to you, but just think logically in 3 buckets. So the first bucket is a passive long-term strategy. Second is an active equity strategy, and that is where basket investing comes in. Now you can say mutual fund maybe hum dal sakte hain. Definitely dal sakte ho. There's nothing stopping you. There are thousands of mutual funds in India. But do you know that 83% of mutual funds underperform the index? So how do you know that you have found a good one? You may have found a good one for now, for the next 6 months, but uske baad, how does he stay the best one? No fund manager has stayed best forever. Okay, so active selection of funds, who then actively manage your portfolio. I don't know if it's you have to think about it. You also have to remember that in fee impact can be very high, and mutual funds are high cost investment options. That does not make them bad. They're just high cost. Okay, so here if you're paying, if you're investing 10 lakhs, you're investing 10,000 rupees as your fees plus some brokerage. Your average cost is very, very small. In mutual fund, you'll pay 1%, 1.5%, in some cases as much as 2%. So, you could end up paying a lot of fees, so which will depress your returns. So you have to think about what is the best way. I think basket investing is a fabulous way to leverage technology and get long-term equity exposure. Okay, but you have to follow the discipline of rebalancing and so on. The third part is not for everybody, but some people seem to like it. And I've seen enough people say to me that, what about short-term investing? We want to take short-term bets. Now, the young people today are trading in options and derivatives. India now accounts for 25% of global derivatives volume, not by value, but by volume. So there's something in the world where, in India, where people like short-term, investing. And I think I would not advocate a huge thing, but maybe 5-10%, you have to look at, see if you get comfortable. Like I said, it's not for everybody. But thinking about asset allocation, in my view, is the most important investment decision. Okay, think of it like this. If you're flying in a plane and the plane goes down, okay, whether you're sitting in first class or the back of the plane doesn't matter. Okay, so you have to choose the right airline, the right plane. Then everybody gets to the destination. Some get slightly more comfortable, some don't. Similarly, in investing, if you're allocated to equities in a rising market like India, then over time you will do well. Now, you may not do well in 1 year to 6 months or something. That's why I say long-term search. Now, if anybody who had invested in India, bina soche, 1991, you would have been a crorepati by now. So, बिना सोचे, अगर बिना सोचे इतना हो जाता है तो सोचने पे तो और भी कर सकते हैं, अब technology भी है. So, I think it's very important how you think about asset allocation, and I think basket investing should be a very significant element of your overall allocation.
I think brilliant answer, Akshaya. Thank you. But on that note, I'm glad you touched upon the fee part, because our next question is to you, and this is from Mr. Jayavardhan Patil. My apologies if the pronunciation is wrong, but his question is that, does the 100 to 188 rupee growth also account for the fees paid? In that regard, how much percentage growth would be seen after deducting the fees?
Okay, we have not calculated that number based on fees, because fees depend on your brokerage account and where you have how much you pay for brokerage. Some places charge more, some people charge less. But so 188 will come down, but it will not come down so much that it will make a material impact. It will still outperform, the index big time. Kiran, do you want to add anything to that?
No, you're absolutely right. I don't want to add.
Because you have to look at our fee, the subscription fees. You look at brokerage, you look at exchange costs. These are very, very small amounts, and that's why I say that if you invest very small amounts, then the impact of fees will look higher. If you invest slightly higher amounts, then the impact of fees is more reasonable.
We can do that calculation. I don't think that will be, after deducting the charges, exactly what are the returns, that we can give. I don't think there will be any issues in that. So Mr. Patil will get back to you on this, on the charges part and everything, like exactly what's the return for deducting charges.
Right, super. Akshay, this is from Ramesh. He's asking, does Equity Select use only technical data?
Ramesh, good question. We have found that technical data tends to have the highest relevance in the 15-day return that we are looking for, but we also use fundamental data. So fundamental data has two roles. One is it creates a universe. So if the fundamentals are bad, we will never pick a stock, whether it has technical indicators or not. So fundamentals is used as a first level screener to limit the universe of stocks on which we apply our models. Secondly, we have found that some fundamental factors also have a short-term relevance, although not that many. So the weightage for technical is higher, but the combination of the 1024 features that I talked about are a combination of technical and fundamental. But you're right that it is very largely influenced by technical factors.
Right. This is a question for both of you, and it's a very exciting question. So, this is what is the relationship between Bridgewea and HDFC Securities, and this is by Mr. Tushar Poddar.
Okay, let me answer that, and then Kiran can add.
Yeah.
We view HDFC as Securities as a hugely strategic partner for us. See, we are not a distribution company. We are not a sales company. We don't sell directly to consumers. We are a product company. Okay, my team is full of AI kids and who love scientific stuff, who get excited about creating return, finding new ways of doing this. So our strategy is to work with partners like HDFC and bring these products to the end customer. And HDFC is such a large name in Indian market. It is such a prestigious name. And we have really, really enjoyed working with them. So for us, it's a very synergistic and a very important relationship where we are the product provider. HDFC has put us through our paces in terms of selection, in terms of diligence, in terms of reviewing us. And we are very proud to be a part of the product set that HDFC has chosen to bring to all of you, their customers.
So my answer is very simple, Ashna. Mr. Akshaya is the producer and we are distributor for this, and we are just channel partner.
Yeah, I would not say just, but
So our next question is on, I think both the questions are on rebalancing. One is something that we can pick up. This is by Mr. Jignesh Pawar. He's asking if rebalance is automated or will he get an update? So you will get intimation on rebalancing over your registered email ID, where you will need to log in into your broker account and accept the rebalancing. Nothing on that front will be automated. And the next question, Akshay, is from Preeti, and this is for both of you again. Her question is, why should I rebalance the basket? Why is it so important?
okay.
So basically baskets are driven by in-depth, research analysis. Okay, so we'll have to be in sync with it. Okay, if something goes wrong, they are the one who will first identify that what's going wrong in that, and accordingly they'll advise. So that is must, that is mandatory.
Yeah. So, Preeti, our signals or the recommendations our AI models make are designed to be 15-day signals, 15-day recommendations. So if you use the same signals for a year, that is not what the model is producing for you. So while you can always buy and do nothing about it for 1 year or 6 months, you are actually using something that wasn't designed for that. So the basket is designed to give you a 15-day return, after which you have to rebalance to get the next set of 15-day recommendations. So it is quite important that you do rebalance. Now, ek do baar miss ho gaya to koi problem nahi hai, but you have to get back on track. Otherwise, you're not making the best of what the machine is offering, the technology is offering.
Akshay, I think last two questions. This one is for you. This is from Shruti and Shruti Bhatt, and she wants to know what are the top 2 parameters considered for stock selection?
Shruti, that is impossible to answer. What we do is a combination of 1024 factors. Okay, it is a combination of those that works. So you can say that For instance, price earnings ratio, for instance, 6-month moving average, for instance, 1-month moving average. All these are features. Which feature has most relevance in combination with other features? That is what makes the prediction. So it is impossible to say which 2 features are the most important. That is not how this thing works. It's not an analytics thing. AI is based on probabilities and looking at patterns and looking at the probabilities those patterns come repeating and so on and so forth. So I'm sorry to give a slightly goofy answer to your question, but I cannot answer that. My apologies.
I think then it's a very broad question next that is being asked, and I think it's open to both of you. What, according to you, is the difference between MF and basket?
Okay, let me pick that up, and Kiran, if you don't mind. See, in MF, first of all, what you are doing as an investor is different. In MF, I am giving my money to the mutual fund, saying, "Aap manage karo." I have no control. My only control is take the money back. Okay, but how they manage is I don't know what they're doing. You can look at it, but 2 months later they will tell you what the positions they held a month ago and all that. So you are actually giving discretionary authority to somebody to manage your money. Okay, in baskets you are managing your money. Okay, all trades happen in your own HDFC brokerage account. Whereas in an MF, all trades will happen in the brokerage account of the fund, which will be run by the fund manager. So it's a very fundamental difference. When you ask, it's like, hiring a driver to drive your car or driving a car yourself. It does the same thing, but it's a very different way of doing it. Now, if you want a driver, then you have to pay the driver his salary and overtime and Diwali gift and Christmas gift and bachon ka ye and loans and whatever else that you have to do. And if that's what you want, then you must do that. But if you want to drive your own car with respect to investments, then there is no role for a driver. So think of Equity Select as the GPS in your car. It tells you what to do and where to go. Okay, if you're a driver, then why do you need GPS? Driver knows where he's going.
I think it's called dependency. Now here everything is in your control, and there with mutual funds, you are at mercy of someone that who take decisions for you, right? So basically that's the difference, and I think Akshaya has covered that.
Yeah.
So that is the basic fundamental difference between mutual funds and.
There's nothing wrong with one or the other. Yeah. They are different. They are different.
Yeah.
Oh, I absolutely agree. And on that note, we come to the end of our question answer round. Akshay, Kiran, I think today's webinar has highlighted the importance of adapting to modern investing trends. And
Sure.
I think I would like to thank both of you for emphasizing the role of technology, AI, and data analytics in reshaping the investment landscape. We feel as investors, it's vital to stay engaged, explore new opportunities, and embrace innovation. And I guess that's exactly what we spoke about today. So thank you. Thank you so much. The financial world is constantly evolving, and our ability to adapt will surely define our success. Before I end the webinar, one liner each from both of you, more like a takeaway, I guess, and that'll be really, really helpful for all of us.
Kiran, you go first.
No, I'm just one line. Start investing in Equity Select. We have certain positions with us, and definitely, we're all RMs. Are we sitting in the branches? On the desk, they will help us out in this. So thank you so much. Akshay, for your insights. We'll take it forward.
Thank you. And my one liner is the same. Look at Equity Select. Look at all the other baskets that we will be coming up with. They will be available through HDFC. And make Equity Select an important part of your portfolio. And thank you very much for spending the time listening to us. And it has been a great pleasure. Thank you.
Thank you, Akshay. Thank you, Kiran. And thank you, everybody, for joining us today for this enlightening session. We look forward to the continued journey of discovery and learning together. Have a great day, everyone. Thank you so much.
Thank you. Bye.